ready now to have a look at second stage allocation, which is assigning costs from the activity cost pool to the specific cost objects, whether they be products, customers, orders, etc. So let's recap where we left off at the end of the last video. Step number 3 was to calculate activity rates. And I mentioned at this time that this was much like calculating a predetermined overhead rate, where we have some estimate of our manufacturing overhead divided by an activity level. In this case, we have the amount of dollars that are assigned to some activity cost pool divided by some estimate of the activity level associated with that cost pool. And as we go through the textbook example at the in a few minutes into this video, we'll see how that's done. Once we have our activity rate, we are ready for actually assigning the costs to our cost objects, which is step 4, assign overhead costs to cost objects. And cost objects typically are of two major types, product and customer. We want to assign costs to specific product lines and costs to specific customers, and sometimes to a customer order to see, are we making money on each order, or is there something wrong with our costing system overall? So how we do this is we take the activity rate that we calculated in 3 above, and we multiply that activity rate by the activity measure that we've arrived at for whatever cost pool it is. And the activity measure is the activity level, whatever activity level per product, per customer, or per order. So some of the some products might not have the same types of activities that other products do. So rather than charge overhead across all products, what we're doing now is we're saying, well, look, some of this overhead is only incurred when we're dealing with product B, but not product A, so product A shouldn't get any of it. That's the power of ABC, up and above all the detriments that I pointed out so far. And then finally, we prepare some management reports. So without having to explain it any further, why don't we just jump right into the textbook example? It explains it a lot better than just looking at abstract numbers can. Well, let's calculate our activity rates. We have assigned some of our overhead costs to activity cost pools at this point, and here are our totals for all of that work that we've done, first stage allocation. We now have to come up with an estimate of total activity, and that is what column B is. So the company estimates that it will receive 1,000 customer orders over the next year. It will design 400 products. It will incur 20,000 machine hours and deal with 250 customers. And then, of course, we have some costs that don't apply to any of these cost pools. So, much like the predetermined overhead rate, we would take our estimate of cost divided by our estimate of activity, we get a predetermined overhead rate. Here, notice we still have the word rate, and we're still apportioning overhead. So this is still an overhead rate, but we don't call it a predetermined overhead rate because that implies one rate. We call it you can call it a predetermined activity overhead rate, but it's just shortened to activity rate so as not to confuse it with predetermined overhead rate. But understand that it is the same thing. This $320 per order is a predetermined activity overhead rate for each order we receive. So we can read down this column, the activity rate. We know that every order we receive will attach $320 of overhead cost to it. Every product we design will get $630 of overhead cost, etc., etc. Now, an important thing to point out before we move on. Whenever you take a total and divide it by a number of units, you will get an average cost per unit. So in other words, for 1,000 orders, we figure that it's $320 per order on average. But as any student of statistics knows, an average is absolutely meaningless without some measure of variation. Now, for customer orders, if the range of costs actual cost per customer orders are anywhere from 300 to 340 per order, we're good with the 320. But if the costs range from as low as $40 to handle an order up to $1,000 to handle an order, this is pretty bad. And that's the problem with activity-based costing, is that it relies, number one, on estimates and judgment, and number two, those estimates and judgments are turned into averages. And if it's not done right from the beginning, then these average costs end up being absolutely meaningless and sometimes even misleading. Let me give you an example of how misleading it can be. I'd say roughly about 8-9 years ago in the US, AT&T decided that, you know what, when people use our stores, as opposed to shopping online, they consume far more of our resources. We have to pay rent, we have to pay staff, etc., etc. But we don't charge anything different from them doing it on the web and them doing it in the store. So they decided to charge an extra $50 on every invoice in the store. So if you went in the store to get something and you went up to the cash to pay, the first thing they rang in was a customer service fee of $50. And then they billed you for whatever. So you could buy a phone for $149 online, or you can buy it for $149 in the store, but you're going to pay the other $50 for the convenience of the physical location. So you're going to pay $50 more. Well, it didn't take long before customers said, I'm just going to go home and do it online. Thanks for telling me everything I need to know. Now I'm going to go home and do it. Well, from leaving the store to the way home, who knows? They might have passed a Sprint store or another store. So that the number of people leaving the store didn't translate to the number of people buying online. Secondly, it left a bad taste in people's mouth that you're treating me like that? You got to be kidding me. Think about this. What if Walmart charged a cover charge just to get in the door? $3 to get in. You fill up your basket, you get to the front cash, and the cash register says, the cashier says, I can ring it all in for you and tell you what you owe, but there's a $2 service charge for me to ring things in, because that's what it costs Walmart to have me stand here and the technology here and the cash register. It costs them about $2 to process every customer, so you got to pay me. If they started doing that, you'd leave. You expect that they would know their pricing and put it in the cost and be done with it. Once they start charging you all these little things. So turns out that AT&T canceled that policy after their activity-based costing system said, this is what's going on. You got to charge another $50 for them to use it here. They realized that that's a stupid thing to do because you're managing the transaction and you're not managing the relationship with the customer. And if you want to see the difference between the two, be a customer of CIBC and be a customer of TD Bank. CIBC will manage the transaction and you're meaningless to them. TD manages the relationship and the transaction doesn't mean much to them. The difference between customer service and loyalty between the two. Okay, let's move on. So it is worth having a look at what we've done so far, because ABC can be a little bit confusing, because instead of one stage of allocation, we have two. What we've done is we've identified some cost objects, products, customers, and orders and customers that we'd like to get better information on. There are some costs like direct materials, direct labor, and shipping that are, as it says here, directly traceable. So we don't need to apply it or assign it. It just gets put into the price of the product or the order or the customer because it is directly traceable. But then we have overhead costs which are not traceable to any one product. ABC uses both manufacturing and non-manufacturing overhead costs and then identifies activities that relate to building a product, satisfying a customer order, or servicing a customer. And we have customer orders, product design, order size, and customer relations. And of the 1,810,000, it is felt through management and through supervisors and interviews and a lot of discussion, it is felt that 320 of that belongs with just handling customer orders, 252 for product design, 383 for order size, 367.5 for customer relations, and then whatever's left over is unassignable. There's where we left off. That's first stage allocation. We've just discussed that we have, out of customer orders, we anticipate 1,000 orders. So it's 320 per order. That's the activity rate. So once we have our little T accounts, you can think of this as a T account here. Once we have our little T account and we've assigned, remember that goes in as a debit, we've assigned $320,000 of costs, of overhead costs to it, we must then get that $320,000 into the cost objects. We do that by an activity rate of $320 per order received. So for certain products, for product A, maybe there's only 300 orders or 400 orders. Well, we multiply that by the 320, etc. And that is I'm giving you sort of a peek ahead to what second stage allocation would be. So in order to do second stage allocation, we need to identify, well, let's do it for products. Number one, we'll start there. Well, how many products do we have? This particular company has 2 products, the standard stanchions and a compass housing, custom compass housing. Well, it's not enough to know that we have 2 products. We have to know something about how these 2 products go from raw materials to a delivered good. So we need some description of what goes on. And we can see here, number one, this product line does not require new design resources. So we're not going to assign anything from the product activity pool, the product design pool. None of that gets assigned to this particular product. 30,000 units were ordered during the year, making up 600 orders. Remember, we got to $320 per order. So we'll multiply the 320 by 600 to apportion that overhead to this product line. And finally, each stanchion requires 35 minutes of machine time for a total of 17,500 machine hours. We arrived at $19 per machine hour, so we know how to do that there. And then we go through the same thing for custom compass housings. Now, imagine a company with 50 products, all with each product requiring different types of resources and different types of time. You can see that if you don't have an automated system, if you're attempting to do this by hand, it cannot be done. So here's an example of what our assigned costs, all said and done, look like. For standard stanchions, we're going to assign a total of $524,500 in costs, in overhead costs, just overhead. Custom housings is going to get $427,500, and we're apportioning $952,000 of our overhead costs to products. But we have $1,810,000. We're only applying $952,000. Well, because we're just doing products. Customer relations has nothing to do with the product itself, so that gets unassigned to products. We'll see that gets assigned to customers later on. Other, well, that's organization sustaining. That doesn't get assigned to products. That goes into another category, so we have a subtotal. And we see that we do get to $1,810,000. So we're really just applying 50% of our overhead just to products, just to measure the cost of the product itself. So here's a nice breakdown of how we get from the activity rate to the allocation of each product. And we're doing second stage allocation for products. The cost object in question here are products, and we're doing second stage allocation. So here's our overhead costs for the standard stanchions, and we have the activity cost pools related to this product. We identify customer orders, product design, and order size. Here's our activity rate that we've already calculated, $320 per order, $630 per design, and $19 per machine hour. We said that this product will take 600 orders, so there's the applied cost, the allocated cost of that overhead to this particular product. Product design, none. We said none, so it'll get nothing. And $19 per machine hour times 17,500 machine hours will be allocated $332,500, and there's the total, $524,000. We move on to the next one. We have our custom compass housings, our customer orders, $320 per order, has the balance of the 1,000 orders, 600 up here, 400 down here. There's the allocated overhead to this product. Product design, this carries all the product design costs, 400. 400 orders, 400 designs. Why? Because look what product this is. It is a custom compass housing. It's custom made, so every order is new. Every order is different. So 400 orders will require 400 designs. and there's the total. And then of course machine hours, there's a limited number of machine hours, which we would expect. If this is more custom and this is more process oriented, we'd expect more machine time here and more labor intensive activity here. There's our order size, and there's the total that we assign to that product. So before we leave this video, let's just have a look at how we do what we just did for a product, but to a customer. And on the screen here, you'll see the features of Windward Yachts, which is a particular customer of the company that we've been dealing with. And we have certain characteristics of this customer. Number one, the company placed a total of 3 orders. 2 orders were for 150 stanchions, and 1 order was for a single custom compass housing. So at least we know how to partition some of the costs for that. Number 2, total of 177 machine hours were used to fulfill the 3 customer orders, and it breaks it down per product. And finally, number 3, Windward Yachts is one of 250 customers served by Classic Brass. So we know we'll have at least 1 customer overhead cost assigned to this particular customer. So when we want to apply the activity rates to this particular customer, recall we have our cost pools: customer orders, product design, order size, and customer relations. We have our activity rate per each cost pool that we've already figured out: $320 per order, $630 per design, $19 per machine hour, and $1470 per customer. Then we would multiply it by the activity incurred by that customer. And in reading about that customer, we saw that they placed 3 orders. So 3 times 320 is 960 overhead applied to this customer. Only 1 design, because of the 3 orders, only 1 was for a custom housing, custom compass housing. $630 is applied. 177 machine hours were incurred at $19 per machine hour. So there's the cost for machine hour for unit level costs. And $1470 just for being a customer. That's the overhead that the company thinks it costs to maintain 1 customer for the year. So the overhead costs applied to this customer were $6,423. What does this mean? Well, it means that whatever this customer bought, once we deduct all the direct costs, we'll get some customer margin, some amount of money that we made off this customer. But that's not the true amount. From this customer margin, we must subtract the overhead that's required to support this customer, and then we get to a profit. Now, this overhead required to support this customer would not be incurred. None of these costs would be incurred if we did not have this customer. That's the test. So if Windward Yachts disappeared, our overhead costs may drop by this much, because these activities are related to the existence of this customer, so they may drop by this much. In reality, this is what would happen. We arrived at $1470 per customer by dividing our overhead costs by 250. If we had 251 customers, this cost per customer would be lower. If we had 249 customers, this cost per customer would be higher. Because if you lose 1 customer, you may not get rid of the job that was taking care of that customer, because there are still 249 other customers to take care of. So it can be misleading. ABC can be misleading in the end by the assumption that if we get rid of this customer, our overhead costs would drop by this much. These overhead costs may be part of a fixed component that wouldn't change no matter what. Just the activity of the person doing it may change, but we wouldn't be able to change the fact that we still have to carry them on our books at whatever cost they are.